All right, everybody, what's up, and welcome to our YouTube channel. Today, we are going to be talking about what trigger rate is, and we're going to dive a little bit into this whole September interest rate hike pause potential, and we're going to give a little bit of our opinions on what's going to happen. None of us have a crystal ball.
The worst.
So we don't know what's going to actually happen. The Bank of Canada seems to run their own program a little bit. We're going to give a little bit of insight into what we think is going to happen and keep it somewhat neutral.
So a trigger rate only affects those with a variable rate mortgage, which makes your payment static, right? Your interest rate was going up and down, which only affected the principal and interest within your mortgage payment. So the payment stays the same, but as the Bank of Canada has been increasing those interest rates, you've been paying less and less principal each time it has risen. I have several clients that were placed at like great prime discounts, right when the rates were kind of at the bottom at prime minus say 1.15%, which put them at a 1.3% static variable payment at specifically a lender TD does those static variables. So at that time they were paying around on $1 million mortgage about $3,300 a month, insanely low, crazy payment to be borrowing $1 million. But as the interest rates have been continuing to happen, that $3,300 that was originally say $2,000 principal and $1,300 of interest started becoming, when they did the first increase, $1,800 in interest and less principal. And slowly they're getting to that point. Now, depending on what happens in that specific client that I have in mind that I'm using as an example, if the Bank of Canada rises by another 0.5% in September, he's going to hit what's called the trigger rate. The trigger rate is basically the point where now that $3,300 payment is entirely interest. He's not paying anything down, so technically his amortization has extended to infinity. Then the bank's gonna come calling and give you a couple of the options when this does happen. The first one would be, and the one that they would really like you to do because they make more money, would be to lock into that fixed rate. So here, we can put you into a fixed rate. I know it's maybe still a little bit higher than where you're at. Your payments are probably gonna jump up like crazy because you're technically still paying that 1.3% interest rate payment on $1 million. So you're gonna see a huge drastic difference in that payment. You're gonna be locked into a contract with the bank at the time where we're seeing peak high interest rates, right? Now you're gonna be locked in for whatever term you take with that lender. Second option would be you can make some lump sum payments to start paying down some principal and continue to kind of pay those interest only payments, essentially almost like a line of credit. You would continue to be paying that mortgage off. Or the third option, which I think is great for most people to do, is increase your payments yourself. So go to your bank, your lender that's offering you the static payment. They're gonna give you a call and you're gonna say, I wanna increase my payments by $300, $500 that's gonna go directly to principal. So now you're actually paying off some of your mortgage.
You can choose that amount?
You can choose your amount. Generally, it's going to be determined by which lender you're at, because some lenders will allow you to increase your payments up to 100%. So technically, if you had a $3,300 payment, you can make it $6,600 if you wanted to, and that would go to principal. Some will allow 15% increases. Depends on your initial contract, your initial commitment that you sign with the lender, and they're all slightly different. Those are sort of the three options, and the worst option is doing nothing, because you will default on your home if you do not pick any of those options. You have 30 days, I think, from the initial call that they're going to make. They're going to email you a couple times, they're going to try and call you a couple times, and if you take no action, it's as bad as missing your mortgage payment that you've now default on your house, and they're going to start the foreclosure or power of sale. Very serious to be taken. If you have a static variable, look into your options. You could potentially do it prior, right? You can be proactive on this and go increase them now, or wait until you get that call, wait until you get that trigger rate hit, and then make a decision at that time.
This is only for a static variable mortgage. If you have a fixed or a variable already, this doesn't apply to you.
Fixed or the adjustable, because the adjustable you've been increasing and you've definitely felt the increase.
I just get a letter in the mail every month from Scotiabank saying, and here you go. This is yours
and
now.
so, but that's good and bad for you, is that you've been riding this wave of increases. So you're kind of like, okay, I know it's going up, but now I can kind of budget for that, and you at least know that payments are being made towards your principal as well.
It also is nice that my car was stolen, so I don't have my Range Rover payments anymore.
So it's like you're using your condo more,
I was
right?
actually
You're at home a lot, so it's actually worth it. You get more value
I'm
out of your mortgage
saving
payments,
money.
right? Yeah.
Yeah, no, I plan that. But yeah, okay, so that's what we want to talk about. The biggest thing, I see this trigger rate, and honestly, I know a lot of realtors that don't even know this. So if you're a realtor watching this, you're welcome. I'm pretty much a mortgage agent now because I've been hanging out with Zach too much. So for any of your mortgage needs, let me know.
Yeah, I'm pretty obsolete now. Just call this guy and.
No, I think
I'll
that's-
just sign the papers, and then you can do my whole job. Actually, it's fine.
It's perfect.
That's
I don't have a car, so I can't go anywhere anyways. The amount of clients that I talk to on a daily basis that have no idea what their mortgage even is or what mortgage contract they signed, or it's crazy. So if you don't know and you're unsure of what type of mortgage you have, don't hesitate to reach out to Zach. He'll
Like
answer
a
you.
lot of people that just dealt directly with their bank or with their mobile mortgage specialist or something, not saying that there aren't great ones out there as well, but have less, conversations around these things and just say this is the product that their specific bank's trying to push at the time, right? Because they're being told this is where we're going to make more money, you should put more people in 5-year fixed or give them this option, etc. It's good to know what's happening, especially because I think a lot of people with this rate increase, if they haven't hit it already, depending on how low your interest rate was and what you got at the time, say 12 months ago, this is going to be a lot of people receiving those phone calls and emails about hitting that trigger rate.
So I hope that answers your questions on trigger rate. And again, if you have any questions on this, don't hesitate to reach out to Zach or I. We can definitely point you in the right direction, at least sort of give you some sort of advice so that you're not confused or feeling abandoned or left out to, we're here to help you. If you are enjoying this content that we're putting out, if you have any questions or anything you want to add to this video about trigger rates, please feel free to put a comment in the section below and we'll absolutely address this. And if you have anything else you want to add, we would love to hear your comments. We always like to have real estate conversations. This increases everybody's knowledge on everything. So thanks again so much for watching. We appreciate it.
Thanks,
Don't
guys.
forget to subscribe and hit the notification button so you don't miss any of our videos we put out.